Good morning, everybody. It's Wednesday, December 11th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Quickly here, overnight markets had March corn up a penny and a quarter at 4.50 1/4. March soybeans were down 2.5 at 9.97 3/4, and March Chicago wheat was up 3 at 5.64 3/4. This morning we had a CPI report out. 12-month inflation rate came back at 2.7%. That was up 0.3% on the month. Was in line with estimates. Still shows that we've got an uptick in inflation here. The outside markets, S&Ps did rally actually on that number that fell within estimates. Good morning, guys. We got through the USDA report here yesterday. I'd say by all estimations, some surprises in corn. 150 million bushel addition to our exports on the strong pace that we've seen. Ethanol was up by 50 million bushels as well. So you got a 200 million bushel reduction on the carryout. We did see some strength in corn again here marginally overnight, but certainly during yesterday's session. So Dustin, maybe take us through your thoughts here post-report, and then we'll throw it around the room.
Yeah, so, the 150 million of additional exports and 50 million additional ethanol took corn down. I think the biggest thing that, the market should be looking at is, we have a year-over-year stocks decline on a record yield by 6 bushels to the acre, right? And it's just another reminder that we go into 25 we've been on a very good demand pace. What are the chances that we're going to continue to see 183 yields and above? I think we do have to pencil in better trend lines. We're obviously seeing that. But it wasn't that we had, poor weather and record yields. We had a pretty good growing season, so that off chance that we still have that 1 or 2% trend line yield cut and, going into the next couple of years, we're going to be potentially back at pipeline very quickly at these types of demand numbers. So it's, I guess, not that surprised to see the market starting to post new highs here. The other thing, Justin, I'm sure Justin will touch on this too, just that the thing that we've been talking about of global stocks to use numbers ex-China, right? If you just take Chinese demand or, total Chinese supply and say, well, they're not going to export that anyway. What does the rest of the world's balance sheet look like for corn and wheat outside of China? And it's just getting tighter and tighter. We're getting down to that sub 10% number for corn and tightest wheat stocks since 07, 08, which was, we had, wheat in the teens back then at the time. We have a lot of wheat that's grown many places around the world. We have, Russia not off to a great start, however. I think that there still is a potential tinderbox here that the market has gotten just over its skis on the bear side, and the funds are just starting to get long. Wouldn't necessarily rule out anything right now. Could be really negative from trade war and strong dollar. It could be positive because we have one little slip up in South America this winter at some point.
Yeah, was I supposed to add to that?
Sorry, I was.
I was like, do we have audio problems?
Yeah, okay.
I'm gun shy after yesterday. Yeah. No, Justin, what do you?
No, I agree, and I think it's an interesting dynamic, and we've seen this before where the world situation gets tight, and we've become the last provider of some commodities. In my opinion, we've sucked up all the veg oils in the world. Then we got cheap. We started doing business. We've sucked up all the corn from our export competitors. And wheat's kind of in a similar situation. We haven't seen the demand come yet for the wheat. But we had to run through all these cheap supplies, and especially when you have these big currency moves where, the Russian ruble, Brazilian real, all these other competing currencies, getting slaughtered, Canadian dollar against the US dollar. So not only do we have the supplies, but we have a really strong currency. And we're still doing, at some point, it doesn't matter because you're the only country that's got it. So you can be competitive, basis levels, FOB levels, all these kind of things push demand our way. So it can ultimately end up being quite friendly, until these other countries get replenished or have enough supplies to be, really competitive on the export market. So, it could end up being, we saw this in wheat. I think this was 06, 07. We were always kind of the last supplier of wheat until the road runs out, and then it's game on, because our wheat market especially hates to sell wheat export. And when you're the last resort, that's what can create fireworks, especially in these commodities where there's a comfortable short, likes to earn the carry. That party's already kind of getting ruined in corn spreads. I think that's what flipped from short to long when, you didn't get paid to be short anymore, because we ran into demand. So yeah, I think there's some pretty friendly things here. Obviously South America's the big, 800-pound gorilla in the room, with just big supplies coming our way. So we still have to grow, still have to finish it. We still have to plant the safrinha crop. Beans is probably the biggest weight to the overall market that I see right now. And, we're bouncing off contract lows. So we've gotten down to those levels. We'll see, if it makes another leg lower, but that's my opinion. That's still the biggest risk is bean prices.
Oh, very good. And we'll actually, you referenced South America. We'll get a CONAB number out tomorrow morning too. So it'll be interesting to see if any adjustments are made out there. Ben, what's on your mind this morning?
Yeah, I definitely agree with Justin. I think that the wet blanket right now is beans. And I think the most bullish thing for corn would be a new crop, a bean rally, because if we organically just get acres in corn because the bean price stinks, that's no fun for anyone, right? That's the worst outcome, in my opinion. As far as the wheat goes, once you get to that point where Russia takes their boot off the throat of wheat prices, it's starting to work a little bit higher. It can get pretty supportive, and you have some big shorts in different places. French wheat, the U.S. contract, they're short, and there's nothing that can go like wheat when they're short for product. I think it can be one of the most inelastic trades there is. So I think wheat is the one that is really interesting to me come, from January 1 or here today, whenever, kind of through March. That's where we could really step up and see some things that carry wheat pretty aggressively. So for now, I look at what we've done. We had a nice rally into the report. They got rewarded, hitting up against that 200-day moving average. I would kind of expect a little bit of chop around here for a few days, maybe some back and fill, and then decide where we want to be. So it is to note that basis came off in a lot of places yesterday. There was a lot of corn that was sold by the grower. If you're watching the volume on the ladder, I mentioned to Justin yesterday afternoon, it's one of the largest numbers that I've ever seen trade on 2 strikes in corn. So I do think that they've got some needs met for now, and we'll see. I don't know that this, demand markets don't just go vertical. They make it hard. They shake you in, shake you out, creep up on you. They let you in if you want to be bullish. So I would expect a little shake in the tree at some point between now and next Monday. So. But I do think the wheat is one that is very compelling. And I don't even think it's a matter of if. I think it's a matter of when.
So Ben, just a side note, what would be your 2 favorite nicknames for the wheat market from back in the day? I like Sybil. That was my favorite one.
Sybil's a good one. I mean, it's wheat.
You can't say the other one.
Oh no, I will not say it publicly. But if you're on the right side of it when it goes, it can be your dream girl too. But I think a mentor of mine summed it up best about wheat, and he said it's 29 days of pain and 1 day of getting paid, right?
Yeah.
And that's just kind of how wheat trades. Some of the better wheat traders I know, that when it gets to where they really want to be long it, they don't frustrate themselves with futures. They just go buy calls. Not a recommendation for anyone. And, they wait it out. So, because it can bleed you to death while you're waiting for it to finally go.
Yeah.
I did read though, Ukraine did bomb a southern port in Russia. Limited damage, but if you're a wheat short, you might be a little bit anxious if Russia retaliates there too. So something to watch.
Yeah, just wheat's gotten in this, ever since the first invasion. It's kind of like, well, we're just gonna be bearish, like nothing matters, especially on war fronts or so. There's definitely complacency, and you see it in the options markets. We were talking about this. Vol's super cheap. So we've kind of had a good combo of like rising flat price in corn and really low vol. That creates opportunities, in my opinion. When the risk gets more weighted towards, you could see a big move or up or down from a certain level, and you have cheap vol, like those are good combos for hedgers and speculators, everybody. So
for us to get moving, because I mean, here again in 2 weeks you're gonna have holiday markets, and we're gonna grind through that, and then we're gonna argue about what the January report's gonna look like. So still got some good stuff on the horizon here. Ryland, we saw some 191 trade in Kansas yesterday, and just a real big volatile break early on in hogs. So what are your thoughts as we start the morning?
Yeah, we rallied on just early cash news. I think it was just a bit of surprise that the Packers were coming after everything so early, especially just, paying steady money in Kansas and then posting bids at 191 in Texas. So the idea is that they're just going to keep on being pretty aggressive here into the holiday season. Beef prices were mixed yesterday, so choice is holding on pretty good. We haven't seen that kind of seasonal drop off here, but the next few weeks we'll see how that acts. So it just kind of felt like the market was getting a little bit complacent with what was happening with the price action, especially with the changes in beef. But yeah, I mean, overall pretty good news. I don't think the WASDE really shook anything out too big of a deal, but it was kind of interesting that they did note that the 2025 beef production was going to be down sharply because of this U.S.-Mexican border closure. The implication, I think, was that it's going to stay closed for a lot longer than what the market thinks. So overall, I mean, like, it's a friendly tone, but time is going to see if that's going to be the case or not. So we'll see how that kind of shapes up. Otherwise, yeah, in the hogs, it looked like we got some technical kind of liquidation here. Open interest was down 3,400 contracts. Cash is still holding up okay. I mean, I know we're going in December expiration, so I don't expect really big fluctuations there overall. So the focus is going to be on the Fed, and we crossed over some pretty significant moving average, the 20-day, the 4-day. So I think naturally you get some, you hit some stops, you get some profit taking from the guys that have just been long this market at this time. So we'll see. I mean, I think the eyes are on carcass right now, just coming down a little bit. So, I mean, I think that's a little bit of a concern, especially just how unbelievably long the managed money is. I think that's kind of the biggest price risk we face if we really start to see cash prices and carcass start to drop from here. So just that kind of market right now.
Very good. Appreciate the update. A couple of things to point out here this morning. It's going to be a busy day here at AgYield. We've got multiple webinars. We got a 10 o'clock webinar that's reserved for our clients. We're going to go through government programs and crop insurance here for 25. We've got a real good presentation put together. Everybody should tune in. There's still time to register there. So if you're AgYield consulting client, go ahead and get registered, and we'll see you there at 10 o'clock Central. And then at 12 o'clock Central today, open to the public. We've got our financial services team is going to go through a roadmap to 25. We've got a special guest from the lending sector, going to talk about all things getting prepared for 25, how to go to the bank, answer the tough questions, and just make sure that your house is in order as you start this next year. So real exciting stuff there. Be sure to tune in. That'll, like I said, be at 12 o'clock Central time today. Tomorrow morning, we'll have export sales out 7:30 Central. We'll talk about that in the war room. If you wouldn't mind, throw us a like or subscribe. That'll keep you up to speed on all of these special webinars and things that we do, and also keep you up to speed on the show. We appreciate everybody that tunes in on a daily basis. So if you wouldn't mind, doesn't cost you anything to do so. Throw us a like or subscribe. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good conversation. One last rundown here of the markets. We got March corns up 1 3/4 at 4.51. March soybeans are down 1 1/2 at 9.98 1/4. And March Chicago wheat is up 5 1/4 at 5.67. We look forward to seeing everybody here later today. Hope everybody has a great day. We'll talk to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.